All right, happy weekend again, everybody. It is Wes with Pikes Peak Trades, and welcome back. If you are a longtime friend and follower and enjoy these videos, thank you very much. If you're a new follower, glad to have you along, and I hope that you find these videos helpful. I hope you find my insights useful and my charts actionable. And I think I've got a lot to share here. So this video may end up running a little bit longer. Gonna try to put some metals and miners in here as well, so I don't do a second video this week. Want to talk a little bit more about some fundamental things along with the technicals. So that's here why we're looking at a picture of the FinViz futures to start. And I had tweeted out before market action on Friday that what I am looking for in general for a bull market run through the summer is to see a rotation back into small cap growth and tech. And I think for that to happen, I think we need to see two things. I think we do need to see bonds get a bid. So, if you look here at the 10-year note or the 30-year bond, when you did see tech start to recover significantly at the beginning of April, you can see here on the charts that's when these bonds were starting to get bid. Interest rates were starting to subside. Why do we need lower interest rates? Well, you need lower interest rates because these growth and tech companies, they've got to roll over, borrowed paper. And higher interest rates makes it more expensive for them. So there's a very practical balance sheet aspect of that. The other thing that I want to point out is that one reason maybe we didn't see Friday follow through. OPEX could be one reason, but I think another reason is we saw oil and energy up. And financials and energy, along with industrials to some extent, had been the play. Really when tech and growth had not for many months recently. And I think we actually need to see a subsiding in the price of oil. I think we need to see rotation out of financials and energy to get that money flowing back into mega cap tech stocks and also some of the growth darlings from 2020. In my view, financials and energy can't carry the market. It can happen the other way around. That tech and growth can, and I think have a good chance of getting back into carrying the market. But we've got to see these, I think, more fundamental things happening, more macro picture things in order to get that to actually occur. Okay, now let me get you into here what I've been showing a lot more lately is a combination of the NYMO and the VIX and the S&P 500. We actually saw a setup at the beginning or late last week that was very bullish. We saw an NYMO close out of its lower BB back in and then with follow through. And typically what you need to see beyond that is you need to see the NYMO get back above the zero line. It needs to get back here into positive territory. Okay, and I tweeted this out recently as well. The NYMO is an oscillator. It's a difference calculation between EMAs. So if it can't get back into positive territory, what that means is your more recent momentum is not winning. And if it stays negative, it means the trend that had been prevailing, which in this case would be a sell-off in the general market, might actually be pulling the market back down. And we actually did not see enthusiastic follow-through. This week we saw selling Monday, Tuesday into what might have been some capitulation lows out there. There were some things that you're going to see that put in a higher low, which would, I think, be bullish. We had a nice bounce Thursday. It was really Friday that I was looking at as being crucial. And I had said if we could break ES futures, minis resistance, 41.75 to 41.80, we could give it a go. And it popped up and gave it a shot, but then got rejected. And let me actually show you that candle, because that candle is concerning here. And so that candle right here, that sign of rejection, you could call it a shooting star. I might call it a gravestone doji. That has me cautious. So I'm actually probably more cautious. Let me say maybe more balanced going into the weekend. And balanced from a perspective of I'm willing to give more bearish scenarios a little bit of weight here because of that rejection and also because of the lack of follow through here on the NYMO. Now, if we see right at the beginning of the week, Monday, if we see a bloody red day and this turns back even more negative, I actually think we could be looking at something significantly bearish. So I actually look at this coming week as being extremely pivotal in determining whether what I have projected in the intermediate term very bullishly, and I've even been willing to extend that time frame out past July, August, maybe even into September, October, could I be wrong? Okay, and so really crucial that we pay attention to what happens early in the week. We follow this NYMO, and I'll try to make sure if you don't have the stock chart setting for that, that I tweet that out every now and then. And of course, also the NYAD that we also need to see for bullish resolution. We need to see a new all-time high in that. So obviously, if that doesn't happen, whether or not the S&P makes the new all-time high, you're not getting market breadth participation. Okay, so there's still a significant bull-bear battle, and let's get into the charts, and I'll talk a little bit through some of those details. So into the weekly chart now, there have not been significant breakdowns of lower rail or channel support or a loss of multiple weekly EMAs. So at this point, you can't say that the bears have control. It really, I think, is a tug of war. You've got the SPX having bounced off its 13-week back into this lower part of the railing channel above the 8. And so right at this point, it looks okay. You know, we get into some of the smaller time frames and a little more questionable here. That could classify as a shooting star daily candle that did make at least a swing high above the May 14th high from last week. So if things are going to break down, there's kind of two layers of breakdown that we can consider. And one of them you see is this alternate count in blue. Okay, so still it would be a painful correction, but the selling would most likely stop at the 200-day. But on the weekly, the other possibility we have to consider is we do need to consider something that would actually get to the 200-week. Okay, so this would be something that would be retracing the entire move from March 2020. Okay, so if I was to give, again, my order of probability, because we haven't yet seen the breakdown, is still going to be my primary black count. My main counts I always put in black to signify what I observe or think to be the higher probability move, that we're still working to finish an intermediate 3. Okay, and so until we see a closing loss of the 13-week EMA in that channel, I'll remain in that stance, followed by the blue and then the red, okay, in that order. And I think anything more bullish than what I've already got, I think is substantially bullish. You know, we're talking about a 12 to 15% run over the next 6 to 8 weeks. That's pretty darn good. Anything beyond that, I think, would probably get us into a major topping area. I don't see us extending more bullishly without having a major top at some point in 2021. Okay, into the shorter term looks here. And we've got this gapping area. So we've got this potential island reversal, but you're going to see this on lots of charts, that the gap from Wednesday into Thursday, and I'm kind of wondering, you know, if these need to close. So could this be a nested 1-2? You know, could there be some deep 4 waves that get that to happen? You know, obviously, I think we're still within a wave 3 of a different degree. So it's possible that I'm surprised and we get a surprising move up. Okay, what I would kind of like to point out from a trading perspective is if you're in mostly cash and the market moves decisively up, then you can get in and you can catch the trend. If you're mostly positioned and in some cases maybe leveraged and the market gaps down, then you're in the worst position. You don't want those trapped longs to be something that you end up holding bags on and you find it hard to let go. So when I kind of looked at the end of day Friday going into the week, and I saw again what I call a binary pattern, that's not a case for me to load up over the weekend. So I reduced risk. I did hedge a little bit because of what I just pointed out, some threatening daily candles, the lack of NYMO follow through, and I am in more of a cash position than I've been in quite some time. Okay, so let's see what happens. And as always, we present EW to give possibilities and probabilities. There's no predictions, there's no certainties here. We really just have to be flexible and adaptable while we're still caught in some trading ranges, waiting for resolution. Okay, let's keep rolling through some others. We'll do both NDX and the Qs in this video. Lots of inside weak candles. So you see it here in the NASDAQ. Bounce off that lower channel. I don't consider this a loss of support. Loss of the 8-week, yeah, but we tagged it, okay, and we were green on the week. It stopped a 4-week red binge there in the NASDAQ. And then you're going to see the possibility of the big sell, but my primary count says we could actually get something pretty surprising. Okay, now into the shorter time frames, we'll have to use QQQ. So let's just jump right into QQQ on the weekly. Here we have more of our bigger market cap, the Tech 100, and you are going to see a loss of that channel. So there is kind of some relative weakness there. You'll especially see that in Amazon here coming up just beneath its, in this case, the 13-week EMA. A little bit of cause for concern, still with an inside week. There you have the breakdown possibility, or we just have to see resolution upwards. It's a crucial week, as I was saying. Looking into our daily time frame here on the Qs, and we saw that resistance that I showed you on the weekly met with selling on Friday. So, may be a little naive of me to think that we were going to run. But my thesis, again, was looking at that MYMO and looking at these pivotal diagonal resistance in MAs. My thought was if the bulls are going to do it, they're going to do it Friday. And when that didn't happen, about an hour into the trading day, and I thought this looks more like a fake break action, you got to size back. You got to think about some hedging, and then you don't need to be trying to play hero into the close. Okay, so again, we're really in no man's land between daily EMAs. Underneath this support, we've got a gap above and a gap below, which is, I think, really going to be starkly pointed out to you here on the 15-minute, and there's your binary look. Okay, so this is not a high probability setup, in my opinion, at all. This is a wait and see approach. I am confident one of these gapping areas is going to get covered, and I can't tell you which is going to happen first. Is it going to cover up and we're going to get a fun move explosively to the upside early in the week, or are we going to maybe gap down and close some of these gaps? It'll be exciting as always, but again, in my view, not worth throwing a lot of dollars at on what I would just coin here literally as a coin flip. Okay, let me get into other weeklies. And I'm going to be kind of rotating the names that I'm going to be showing you on the weeklies. I did Apple and Tesla last week. Let's do Amazon and Microsoft this week. Okay, and Amazon here with a concerning weekly candle. The others not really, but that's concerning. And so I've got the possibility of that big bad red bear count here on Amazon because it is just really not followed through at all, after that run that most of tech had into April. I'm charting an ending diagonal, a set of overlapping 3-wave moves that would get us up to a new all-time high at some point in maybe late summer, early fall. As of now, it's even lost this channel. If I take you into the daily, you're going to see what I just thought was going to be a back test kind of ended up being a fail, now beneath the 200-day. So again, really not positive things to the end of the week. And that's another reason why I was a little extra cautious. Again, if bulls are going to reassert control, then they've got the potential for a 3-wave move. But this to me does not count very well impulsively. So I'm kind of even thinking that, maybe this is probably an A and a B, and we're actually working on a C down that has to hold this 31.28 low. If that breaks with some enthusiasm here, we've got to consider a weak B wave bounce, and we've got to consider potentially something a lot more nasty. Okay, so let's do Microsoft. And, Microsoft on the weekly chart is much healthier. You're going to notice that there's no danger of crossing, at least right now, on these EMAs. That's what you got to see if we're going to get back in trend. Another inside week candle right at here, the 13-week EMA. That's been another trend that we've seen here in tech. I have it also in an ending diagonal. You're going to see the same in NVIDIA. And I think that consistency, to me, I think is a good thing. We're seeing what I view as three-wave moves, overlapping three-wave moves. So here would be the A, the B, and then a five-wave move within that C leg to what I think could be a very significant top here in Microsoft. So the daily look here for Microsoft, and it gave a chance that this was your fake break move, same with Facebook, to pop out and run, and it didn't. And then it ended up, coming back and closing beneath its 50. So, yeah, that's not what bulls wanted to see for continuation. Now, on the short-term count, it's possible that we're just setting up a nested 1-2. So I do want to add that out there for aggressive traders, that if you're looking bullishly here, 1-2, 1-2, and on these names that have broken out of potential bull flags, this to me, for my primary count, would be the ideal entry. So you get a gap to fill, you get a typical fib, you get a back test of the channel that holds and reverses. And if that happened Monday, I've already told you I got a lot of dry powder, is Microsoft would be one I would absolutely be looking at for this. So I wanted to make sure I showed you that. Okay, other weeklies. We're really just getting started here, gang. So we're talking tech. We got to get into ARK. So I want to present more, and I have been doing this over the last few weeks, of ARKK, because it's got a lot of the growth darling names. Tesla, you saw last week. TDOC, I tweeted out last week. We've got here Roku and Zoom that I'm going to show you that are big holdings. And then next week we'll do Square and Shopify, and that'll kind of take care of the top 6 in ARK. So I think we did potentially get that bottom in last week, an inside week that challenged what is now resistance at the 50-week, and then kind of breaking it down into here. I think we already got the 1-2 this week, and just like Microsoft, I think we could be set for another 1-2. So take you into the small time frame here. And here would be that first wave up with the 2. And then here 1, 2, 3, 4. I don't have it labeled, but a 2 that would come back to close that gap right in here. That would be maybe a potential opportunity. If you're interested in some of these growth darling names, you might get pullback opportunities Monday. This gap closes here, and then we've got a chance to get into a wave 3. So let's get into some of those names that I do like. I like what Roku is attempting to do. Build this base, challenge some upper EMAs. It had a great day Thursday. You'll see that here on Roku. I was optimistic, like I mentioned. Friday, we're just going to break back in to this other part of the bull channel. Obviously, rejection at the 50 and this rail. Okay, so where would that put Roku in the shorter term time frames? The bullish to me is very nested. Okay, so there's kind of that fake break. 1-2, 1-2, 1-2, and I could take you all the way down here, probably, into the sub-micro on 1s and 2s. If we see here on the hourly, a pullback, close the gap, that puts it back towards this 50 period in May, let's say low 320s, I'm probably going to go ahead and take a chance that we'll get that assertive breakout, because you see these nested 3s. Okay, so in that case, when to me, the potential reward is there against known stop levels. You know, we would have levels that we could stop out. You could use this fib here as a stop. To me, that's going to be tempting. Okay, let's do SE. Not in the top 10 of ARK, but I think top 15. Really, really nice week. You know, its earnings were actually, there were some missing parts of it. The reaction initially was negative, but then a massive reversal that I'd kind of tweeted out like this right here, caught nearly a perfect back test and then exploded up, you know, for the rest of the week. So there's your Tuesday, Wednesday, Thursday action here on SE. And, you know, it's quite extended now. So, you know, when I'm seeing complementary things suggesting, I don't think it's a wave 2. It's so extended in a 3, probably a 4. This is, I think, a lot of things leading me to think that a pullback is most likely first thing early in the week. Okay, we'll come back to NVDA and Zoom. No, let's do those right now since we're on that tab because that'll take us through our tech. So NVIDIA, another really nice week, got a split announcement that gave it an initial opening boost on Friday, but then without a market tailwind, it gave back most of those gains. So where would I have put that? I think, like I mentioned, we're working on here an ending diagonal. We're trying to find that first leg for wave 3. I don't think it's in yet, but I would say with that reversal Friday, maybe like SE, we're looking for a wave 4 to come back. There's 2 huge gaps here. You had the gap Thursday and then on Friday's news. I doubt both of them fill, but this one that fills here, the Friday gap would give you the wave 4 entry to then give you a run up. And keep in mind its earnings are on the 27th. So you know my philosophy on that. I'm not willing to be positioned heavily ahead of earnings. One thing that happens is you get an implied volatility dump, which means that you could be right on the position of a call contract and still not see it pay off. Definitely not somewhere you want to be. Let's go ahead and do Zoom here. We won't save the Z for the very end. We'll do it while it's on the screen. Want to get into Zoom here because it is an important component of ARK. And it did have a lower low 2 weeks ago while others did not. So is it in? Well, its technical condition is not nearly as good as some of the others. I think it does need to participate if we're going to be getting the movements. And I think it could be ready for a 1-2. Okay, so lots of potential opportunities if you're patient and watching. Let's just kind of see what happens. And as I go through some of the other weeklies here, we'll do IWM and the Dow. You'll kind of see a similar setup. Inside candle, just like the NASDAQ, it's in between here, the 13 and the 8 on the EMAs. Getting into the daily. So this daily, we had a chance to break out and get above these MAs, and it was rejected with what could have just been a back test. Not quite sure if we back tested far enough. So that's what I'm kind of thinking we need, maybe one more back testing move. This obviously a fake break. Here a back test that would hold. The joining here of the 50% fib with the rail, with the 200 period 15-minute MA to me would be pretty tempting. Also would make sure that this gap here closes into the Dow here. So here we had another back test of the long-term upward broken channel that I had talked about in last week's video. We get you into the daily and a little bit of the concerning candle. So that's not a red candle, but that is a shooting star look. And so my call for the short term would be for the 1-2 pullback. Okay, so that takes you through here the main stocks that I wanted to show. I do want to also go ahead and get into the metals and miners to save me a second video because this actually also played into my thesis here. We do see a weekly breakout in GLD, which is extremely important. But you're going to notice we kind of got quite extended away from some of these weekly moving averages. And we get this broken down here into these time frames. And I'm kind of wondering, we never really got the back test. That weekly move marched up And I think it may be time. So I kind of looked at things, and I'm one right now to say still that I think the metals will be correlated with the main indices and ETFs going forward in the market. And a backtesting move along with everything else that I was just explaining to me makes the most sense. Take you through what that would look like on GDX, and you're going to see almost a significant breakout. It was batted back a little bit of this crucial low $39 pivot area onto the daily here. And you know, it's not an outside bear candle, but I'm kind of thinking like GLD, we might just need to pull back, catch up some of these moving averages. Now at the same time, you know, we do have maybe kind of a fractal wedge-like pattern developing, but those that have followed me for a while, you know, I stink at triangles. So typically whenever I try to chart the triangle, it breaks down. So I'm going to go with that track record, which is also consistent with what you've seen so far in some other market things. Okay, the more concerning candles to me on the metals, definitely silver. So don't like the look of that weekly candle. You know, one bad weekly candle doesn't tell the whole story. What happens next is the rest of the story. Also, just really don't like that daily outside bear bar. And again, I'm not calling for anything big, but I've got it in place in case we do actually see a tumble, that we could actually see it come back all the way here, SLV, into the low 24s, upper 23s. So a couple quick names. I like to use AG kind of as a proxy for the bigger mining companies. It has yet to break out. And that's kind of, you know, consistent with maybe GLD, GDX, and SLV, is the breakouts are not yet confirmed. We're flirting with them. Maybe we need another little resting move, gather some more strength to try to make the bust. If it's going to happen, it's got to happen within this wave 3, which is where I've got AG. I've got it waiting for it in a wave 3. And those of you in these positions, you've been waiting a long time. I think it is going to pay, but it might not pay on Monday. You know, maybe tune out the day-to-day noise and just be solid in a position of these for a longer term. We could take a look at something like Hecla, and it did break out. So we are seeing some names in this sector get the multi-year, or in Hecla's case, a multi-decade breakout. But even for a name like Hecla, we're quite extended. I don't like that daily candle. So maybe a pullback to let price catch up, let these moving averages compress a little bit. Then we can potentially look for a little more action upwards into June. And you know, also kind of looking here, basically what you see is kind of my forecast for the summer. Is I think a little bit of volatility in June. So maybe early this coming week, then in mid to late June, then in a big run through July is what I'm suggesting. A tradable top here into July, and then another big run up into the fall. And that is consistent. And I search for that consistency. Another really nice chart that I could just kind of summarize that for you is going to be the ARKK chart. That would be here. Make sure that I get that right. Where are you? ARKK, sorry for this delay. There we go, back into here and into the daily. And this is just going to kind of reiterate what I'm looking at as the bull path forward. So some volatility here, a bigger pullback June, bigger pullback July, and then maybe the potential of something even really, really surprisingly bullish into the early fall. Okay, gang, so hope that was comprehensive for you, clear enough. As always, enjoy the interactions on YouTube and Twitter. I wish you a wonderful weekend. Just a little bit of nuts and bolts from me. We're beginning the transition out of Malaysia back to the U.S. So over the next few weeks, you know, I might have periods of radio silence. I'm going to try to keep up with the weekend videos, but we're kind of getting into crunch time with getting things done, getting ready to move. So anticipate at some point that I will be much more active after we get resettled And then I think eventually some exciting developments from me, looking at some possibilities, nothing over the summer, but maybe into the fall, maybe into 2022, some more exciting updates for where I can see my involvement going next here in waving and trying to make a living off of it. So as always, we project, monitor, adjust. Let's be ready and flexible for anything, and see you Monday.